All right, you guys. So I'm going to go over some basics for people that may not know and may not really understand the um, full impact of everything that's happening in the financial world right now and how it will impact your life. And there's a lot of people that have been a lot of doomsday for a very long time, and you always hear about it's the end and buy gold and all this kind of stuff. And as a trader, you cannot take those people's advice. They're usually insane in some way. They might have the right idea, but they don't understand these moves in here. Okay, now if you say something's going to happen for long enough, it eventually does. So when it collapses, like it very well may, all those people be like, I told you so, but they weren't able to time it. And so I want to show you some things just for like a, not for a trader, but just for somebody who might be curious. These, essentially this chart represents the SPX, which is the SPY, okay? And as you can see, leading up, we had this high in this December of 21, since you've heard about the stock market selling off. Why is this week more important than other weeks? And why should you be paying more attention this week than any other time in your life? One, because this line here, this condition being met of this target being met, has only happened 7 times in the past 50 years. Now, this condition up here, this green line and this yellow line, I'm going to explain what these 3 lines mean in just a second. But I need to show you this first so you kind of understand, so you don't get bored. What happens, you see how this green line is here? You see how it crossed the gold line? What happened next? You see how the price went up, stock market went up, but then the green line crossed this line. That's what they call a death cross. Okay? Now what happened? Uh-oh, this is the crash in 2008. Okay? You see? The green line crossed the gold line, and then a couple weeks later, boom. Uh-oh. Okay. So I want to show you where you are today so it makes a little bit more sense. And I'm going to do a little bit about the macro, because the macroeconomics controls everything right now. Okay, so here you are. The green line is nearing the yellow line. And remember, I showed you what happens when these cross. They don't have to cross. It's not a guarantee, but you're getting very close to where they're starting to touch, which is bad news, right? This line here, this is called the 200-day MA, and this is the most important line in trading. It's the 200-day moving average, all right? So today at close, and why I'm doing this right now is because today at close, you started to kind of slip beneath, but not completely, the 200 MA, right? In trading, if this weekly close moves beneath this 200 MA, the analysis is that you have about 40% more downside from where you are here. Okay, so I'm going to show you what that looks like. So like they call it like Dow theory and stuff like that, but there's just general consensus on these rules. So in this trading week, if this white line, if the condition is met where this white line, we go beneath it and we don't go back above it, then the next condition that would be met is 40% down. Now notice when I set this up, I just pulled that line. I couldn't see what was back here, right? Now I'm going to zoom out and watch. 40% down, where does that take you? You see how there's this support in here? That takes you back to 2016. Okay, so the pullback in this time frame that they're talking about, this would be an extended time frame to give you an idea. So if you're not familiar with this stuff, understand what I'm saying. This week would be the beginning of a much larger cycle. You break below the 200 MA, you can't get back above it, and then over time, say 18 months to 2 years, you go through this larger cycle, and you might even have runs back up like this, you know, and then eventually it's going to resolve itself, which no one would think possible, right around here, which would be this 2155, which is 40% down from this area right here. Okay, so that's all the money in retirement funds and in pensions. You can shave off of that right now, and that's why it's important, because this isn't like conjecture. These are stats that have been proven out through history. So this 200 MA, when you break it and you can't get back above it, things for a period of time, say like on a monthly, say it doesn't break back above for a month, then you're going to have a confirmation at some point, and you're going to run this much deeper cycle, which they call a recession. And it's no coincidence that when you pull that line, it's almost exactly to the T to your COVID crisis. All right, so that's important to take note of, is that right now, and while this is all happening, this would be bad news no matter what. But coming into Thursday at 8:30, you have our CPI. All right, so I've pointed this out before. Not saying it's going to happen, but it's something to pay attention to. So this is the cost of regular gas. The last CPI came in 0.1% higher, and you had a decline in the price of gas. You see from August here, see in August we had this, right? August, prices were decreasing, but the CPI came in high. Now, like I said before, if prices increase again, what do you think is going to happen to the CPI for Thursday? If it comes in high and you're at these levels on the SPY and the SPX, you could have a break lower. Okay, and I think you're starting to get the picture. If it breaks lower, then there really is the potential that you don't break back above it, and you've started a very long, probably 2-year process, and a very deep retracement. And basically, people who don't understand this, you just have to think about it as the pensions. And I talked about the pensions last year in October because they have leverage against them. And I'm going to show you what happened over here. So if we go over to the British pound, okay, and there's news on this today. I'm not going to go too deep into it. Everybody's freaking out about it. So this is inflation. The pound's coming down. Bad news. The week of September 26th, their government, the central bank, came out and said gilts, which are essentially their treasuries and their pensions, are weighted with these gilts and these treasuries, that they had systemic risk. The pensions themselves had systemic risk, meaning collapse, right? And so what they had to do is they had to create quantitative easing. Okay, so they were tightening, and they had tightened because they have to, because of the inflation, which is double digits over there. Okay, you see, and so then they began to ease again, and they were given a little relief. And what's scary to them, if you're over there, Most people don't know this stuff, so when they're not scared, they just get angry. So we had the run-up, the response to the quantitative easing, the market kind of liked that. But this is a very weak rally. And right now, where you're at, based on unlimited quantitative easing, they say we're going to buy all these bonds. And even with that, the bond market doesn't trust them enough. It moved up 6.2%. Okay. But since then, even with the easing, it is now retraced 4.82%. And so even with unlimited quantitative easing, basically the market's saying, I'm not willing to take a risk on this. And there's no buyers willing to take the risk on this. You're only 1.14% from where you were a couple weeks ago with unlimited quantitative easing. So the British pound is collapsing right now. Okay. So what's important about that is, and I've said this before, talking about the spread between the German bond and Italian bond, is that if this collapses, it's really a rock and a hard place now, because the US relies on the business overseas. We rely on money, Netflix relies on people around the world with subscriptions. That business is in deep shit. This is how it's interconnected. Not only that, as this currency devalues and less people use Netflix or buy phones, I'm trying to keep this as simple as possible. It's way worse than this. And it's way more complex and incredible than this. But, just imagine those companies get paid in pounds, right? Then the US company is getting paid in pounds, but then that's got to get converted back to dollars. Okay. And so the DXY, the dollar index, is breaking out. You're at 113 on the dollar. I remember people saying 103. That seemed, the world was going to end when we hit 103. Okay. Now you're at 113, and then they waited for the pullback. And just last week, everybody's saying, oh, pull back on the dollar. There's going to be a rally. Pull back on the dollar, and look what the dollar is today. So when this goes up, core concept, people go, well, the strengthening dollar is a good thing. We are at a point now, people really need to understand, that's why I'm doing this video, you really need to understand what's going on. We're at a point right now where the dollar is putting itself at risk. How do I explain that? So as the dollar is in this range here, and these other currencies start to crash as a result of the dollar pushing up, well, less iPhones are bought and less Netflix, but also the exchange rate, what they call the Forex, on all of your companies like Apple that has global exposure, or Tesla, let's say, that has global exposure. Tesla's getting hit because of the Twitter buyout and stuff. But this company here has this global exposure. So as they get paid, not only are there less buyers, but the buyers that there are, they're also getting crushed by the Forex. They're getting crushed by so if you are wealthy enough to get a Tesla, and you're in the UK and you're just wealthy, you're some elite reptile over there, well, even though that's happening, there might be some buyers. They're still making less because the dollar is skyrocketing. Okay, so that's why it's rocking a hard place. So now our Fed has to go, and they're under pressure right now from the UN and from, these maniacs. an impossible situation to solve. This is why I'm saying this and doing it this way. There is not a solution to this problem, because if the Fed, our central bank, says, okay, we're going to slow down, then what happens here? Our inflation goes up. So they need to increase rates here to keep our inflation under control. But if they don't slow down the pace or start to cut, then Europe and all over the world falls, right? So if the US continues with the rate hikes, it's going to put this is it. I mean, I'm just telling you ahead of time. So right now you're like, well, it hasn't sunk in yet, but I'm telling you ahead of time that Europe either way is collapsing. This is the European collapse, and you'll hear about it in a month or two, but this is it happening. And so it's very important in Europe. What they want is for the Fed to back off, and the UN and these agencies are putting pressure on our central bank to back off of the rate hikes, because if they continue, then it's last of the Mohicans for the British pound. And it's a good example because it is a reserve currency of the world. It's extremely strong. It's always been a major financial, headquarters for the world, London and all that. And so that's what you're watching, is the collapse of the monetary system. And so what to do about that, and why I've been saying, and for the 4 people that listen, you already got the death cross look. So I've been talking about this idea for 3 months now, and every time Bitcoin comes into one of these boxes, I short. I'm crazy. I'm doing this in a way I guarantee, I might be the only person literally in the entire world doing what I'm doing. So what I do is, based on all the conditions that I just showed you, I know that Bitcoin is heading down. And so what I do is I create a position on these things that no one's ever heard of. Now, like, look at this. Let me give you this as an idea. This is called Binance token. Binance is used by the Binance exchange, and with systemic risk, we never know. So everybody's like, oh, Binance token, la la la, Binance will never go under. If a world currency can go under, Binance can go under. And so here's Binance coin. And I started to short this here because it has systemic risk. Binance coin can absolutely collapse to zero. And so what I do is I go over here to the short, and whenever I get a chance, I'll throw $200 in here. $200, $200, $200, and I just keep piling up. $200 here. And anytime I see something hit an area that I like I think the last one I did was Uni. So what I did was, Uni had run up, the short position had come down, so I bought some around here. Around this, I think I got it probably closer to there. No, I think I got it at 45. Yeah, that would be more my style. 45.15. And so you build this position on this ETF short, and over that long duration downturn, essentially Binance token, all these things that people talk about, especially this one, I like it because no one would think this could go to zero. If they don't, it's like, I remember people thinking Bitcoin couldn't go below 30,000. So, Binance coin has systemic risk that nobody's even thinking about. And then these other pieces of garbage like Phantom, no one's going to own Phantom, with a world monetary collapse. I mean, no one's going to give a shit about Phantom. These are probably going to go completely to zero. There might be a few like, Matic. There's going to be some survivors, but some of these, they'll be gone. So I want my hand in that. So I've spread out my chips all across this ETF short list. right? I'm going to keep doing it. So that's how to play it, right? Now the other thing is, for the traditional market, is that you have the crisis going on, right? And so this is UNG, and like I said, UNG will be like the new Bitcoin. UNG is natural gas. And so what to look for, and as you can see, UNG doesn't look like, okay, I just showed you the chart with the green line crossing the gold line, remember, and it crashes. Now what happened here? The opposite. The green line crashed across the gold line going upwards, and look at what happened. Explosive move to the upside. Okay, anytime that happens, you're going to see a big move, right? So we just saw one of those. We just saw this cross, and now we're getting the retracement on that. Now look at what even is crazier. The 100 is getting ready to cross this. If the 100 crosses that, you're going to get a mega pop. So in order to trade this, what you watch for is the sell-off, which is impending doom is on its way with all this. But what's going to happen with UNG, because it's natural gas, is it will too crash. But when it crashes, it probably will come down to that white line. Or less, right? Or somewhere in here. But the most, a severe crash on natural gas would still bring it down. There'll be many, many buyers interested in this zone, but let's say we had a big crash on the SPY and everybody was just sell everything, bail out, get out. You want to enter here. Deal of a lifetime, dude. Because the whole crisis is an energy crisis around the world. Okay? And so this being natural gas, as this energy crisis unfolds, what's driving this whole thing is this energy crisis. And look right there on the weekly, you're getting this cross. So for me, when I look at it, I go, well, this is something to long. This is like the only opportunity for me to long, right? Because I got a lot of cushion. So KuCoin 3x short and UNG long. Savage. All right, my friends, keep on keeping on.